Breaking news in the tech world tonight: Nvidia has finally cracked one of the most coveted partnerships in Silicon Valley, landing Apple as an artificial intelligence customer, and yet, paradoxically, Wall Street is punishing the stock for it. Let's break down exactly what is happening here, because this story is far more complex than the headline suggests. For years, Apple has been one of the most notable absences from Nvidia's growing roster of AI powerhouse clients. Think about it: Microsoft, Google, Amazon, Meta, they have all been pouring billions into Nvidia's cutting-edge chips, specifically those legendary H100 and now the next-generation Blackwell GPUs. But Apple? Apple has historically kept its distance, preferring to design its own silicon in-house, relying on its powerful M-series and A-series chips to handle on-device intelligence. So when news broke that Apple has now turned to Nvidia for AI infrastructure support, it sent shockwaves through the industry. This is not a small deal. Apple reportedly needs Nvidia's hardware to power the cloud-based components of Apple Intelligence, the ambitious AI platform Apple unveiled as part of its push to stay competitive in the generative AI race against OpenAI, Google, and Microsoft. The scale of what Apple is building behind the scenes requires serious computational firepower, the kind that only Nvidia's data center chips can currently provide at this level of performance and efficiency. This is validation at the highest possible level. When the most valuable company on the planet comes knocking at your door, that is a statement about your dominance in the industry. So why on earth is Nvidia's stock falling on what should be champagne-popping news? Here's where it gets fascinating and frankly a little alarming for investors. The market's reaction tells us something critical about the expectations already baked into Nvidia's astronomical valuation. Nvidia's stock has been on a historic run, making it one of the most valuable companies in the world, trading at multiples that demand nothing short of perfection and constant upside surprises. Analysts and traders had already priced in scenarios where Nvidia captures virtually every significant AI customer on the planet. Apple joining the party, while genuinely significant, was perhaps already whispered about in enough investment circles that it lands as confirmation rather than surprise. There is also a deeper concern bubbling beneath the surface. Apple's engagement with Nvidia, while real and meaningful, may actually underscore a troubling long-term narrative that Apple's own silicon ambitions have limits. And if Apple, with all its engineering genius, still needs Nvidia, what does that mean when Apple eventually develops more powerful proprietary AI chips? Could this be a transitional relationship rather than a permanent dependency? Smart money is asking that question right now. Furthermore, the broader market context cannot be ignored. Nvidia faces ongoing conversations about export restrictions, geopolitical tensions affecting chip supply chains, and growing competition from AMD, Intel, and custom chips being developed by the very tech giants Nvidia currently serves. Google has its TPUs, Amazon has Trainium, and Microsoft is developing its own AI silicon. The very customers fueling Nvidia's meteoric rise are simultaneously working to reduce their dependence on it. So what we have tonight is a story with two faces. On one side, a genuine landmark achievement, Nvidia cementing its position as the indispensable backbone of the entire AI revolution by finally bringing Apple into the fold. On the other side, a market that is cold-eyed, calculating, and already asking the harder question. In a world where everyone eventually wants to build their own chips, how long does Nvidia's golden era actually last? The irony is almost poetic. The day Nvidia wins its biggest customer might just be the day investors start seriously wondering if the peak is already behind them.